Welcome everyone. We're going to get started on this morning's accounting series. It's a 101 series brought to us by Crafted ERP, Beverage Industry Solutions Specialists. Just a little housekeeping first off. We are recording this webinar, so it will be available in the industry education section with the Profit Planner series going forward. And also we will have everyone on mute. So please send any of your questions at any time through the chat. Just for anyone who is new and joining us, we have updated our Profit Planner series with Wine Business Education. We have reinstated our commitment to working with Wine Business Education, and they deliver Profit Planner tools, 6 workbooks that you can access through the Oregon Wine Board industry site. So industry.oregonwine.org/education/profit planner, and you can register and log in for those Profit Planner series there. That will give you cost of goods accounting from your vineyard through to pricing forward market. Without any further ado, I am going to hand you across to Casey Johnson from Crafted ERP. Casey is a cost accounting specialist, and she will kick off the webinar with us.
Awesome. Thank you, Bree. Go ahead.
And you got panelist? There we go.
Let me go ahead and allow sharing on my screen. Right.
Great.
Casey, there's like a little computer icon underneath the audio that you should be able to click.
All right.
Do you see that icon?
I see the icon. All right, let me see if it's identifying.
Yep, now we're seeing it.
Awesome.
Perfect.
All right. Well, hello, and I'd like to thank everyone for joining us today for our first session on accounting for your vineyard. We hope you enjoy this session, find it helpful. As Bree mentioned, if you have any questions throughout the webinar, please throw them into chat so we can make sure to get those answered. So my name is Casey Johnson. I'm an accounting specialist here at Crafted ERP. I've spent my whole career working in operational accounting, focusing on inventory management and costing. I've worked anywhere from cereal to fuel additives and joined the Crafted ERP team to really help business owners and operators understand their financials and their costs of inventory. Jeremy King is a principal here at Crafted ERP. He's also on this webinar. He's just watching this time, but you will see him at the Oregon Wine Symposium if you attend our session there. He started his career in investment banking and eventually becoming the CFO of a publicly traded software company. After leaving corporate finance, he worked for a technology and management consulting practice. It was there that he had the idea for Crafted ERP. Crafted ERP is an industry solution built on NetSuite. It helps businesses in the beverage industry manage their inventory and accurately report their finances. So we're very excited to be working with the Oregon Wine Board to help the community continue to grow and understand the cost of their wine and just build on the groundwork that they've already laid out with the Profit Planner. So our goal today is to help you gather an understanding of how to read your financial statements and understand profitability. To do so, we're going to review the structure of a trial balance, dive deeper specifically into the income statement, and we'll also be looking at some simple calculations such as profit and EBITDA that will help provide profitability for your vineyard. Like we said, this is going to be a 3-series section, so we're going to start with the basics today in the 101 and really build on that throughout these sections. So after we've reviewed the financial statements today, we're going to build up that framework for costing your wine. So we're going to be looking specifically today on gathering those material costs to produce your wine, and then going forward in the additional sessions, we'll build on the labor overhead costs and how you can get that full picture of what it actually costs you to produce a case. At the end of all of these slides, we're going to have a Q&A section where those questions will come into play. We'll make sure to get those answered. And then we'll also discuss the upcoming sessions and what you have to look forward to. All right. So the main financial statement that we're going to be looking at today is a trial balance. So we'll be looking at our balance sheet, going over that, all of that makes up your balance sheet from your assets, liabilities to equity, and then really diving into that income statement, looking at your revenue, what your costs of goods sold are, then those additional expenses for selling, your administrative expenses, and those areas. So if you don't have access to a trial balance currently, that's something you can reach out to your accounting team for if you have one. Otherwise, I encourage you to reach out to your bookkeeper, your CPA, to start getting a trial balance in front of you, to start looking at these different aspects. So as we build upon all of this information, you can start looking at, how am I going to gather this? Where am I going to get these numbers from? How am I going to be able to successfully cost my wine? So looking deeper into the trial balance, you're always going to see this reported with your balance sheet in the top section and your income statement in the bottom section. Your balance sheet, your assets are always going to equal your liabilities plus your equity for your common accounting. So when we start looking at our balance sheet in our first section, when we dive into the assets, what you're going to see for your assets, beginning with your current assets, are going to be those bank accounts, any sort of petty cash that you might have available if it's relevant, but really that cash value that you hold in your assets as a company. Then you'll also see your customer receivables, so any orders that you've shipped out to customers that you haven't collected upon yet will be available there too. In that, you'll also see your inventory. So any sort of raw materials that you might have on hand, such as your grapes that have been harvested, your packaging materials, any sort of finished goods. If you have a retail store, you would see any of that merchandise in this inventory section also. And this inventory is what we're really going to use to start building that cost of our wine. So, what are our raw materials, each varietal valued at? What are our packaging materials? How much are those costing us? And really using those bases to build into our finished good value that we're then going to sell to our customer. Along in the assets, we're also going to have our fixed assets. So any sort of vineyard related assets, so your trellises, your irrigation systems, you'll see in this section. Any sort of business related assets, so computers that your finance team or any other admin might be using, potentially a car for your sales force, will all fall into this assets section. And any sort of processing related assets, such as your tanks for storage, any sort of barrels in the facility. After your assets on the balance sheet, you're going to see your liabilities. So this is going to be any sort of values that you owe. So if you have any open credit card balances for the business, any sort of vendors payable, so you've purchased grapes from a vendor, you haven't paid for them yet, you have a line of credit extended with this vendor, you'll see those values in this section. Any sort of loans payable that you may have taken out from a bank in order to finance some of the new vineyard projects that you may have going on will be in this section, along with any other liabilities. So any sort of payroll that you've accrued but you haven't paid out yet because you're not on that 2-week payroll cycle period. And then you'll see your equity, which will include any sort of stock for the company, and then your retained earnings, which is going to be that balancing figure that's going to give you your assets equals the liabilities plus your equity. So now if we go down to the income statement, this is where you're going to find all of your profits for the reporting period. So we're going to look at our revenue, and our revenue is going to be broken out into our total income, and then we'll also break out our sales discounts. So you'll want to see the total value that you are selling that product for. You'll also want to see it broken out of anything you've discounted off that original value. After that, we'll go into our cost of goods sold section. And under your cost of goods sold, you're going to want to see any sort of material costs. And then here you're also going to see what we determine as overhead costs. So any sort of direct labor that relates to producing your wine, any sort of production utilities, storage, additional agriculture expenses or freight, all that relates to the production of getting that wine from the grape sold all the way to your customer. And in these sections for revenue and cost of goods sold, you can break these down further also so that you can have better reporting. So if you have a tasting room or a retail store, you would potentially have income for tasting room, income for bulk wine, income for cased wines, income for your retail store. And then on the other side of that, you're also going to see those separate breakdowns of your cost of sales accounts. So in this tasting room example, if you have an income line for your tasting room, you're also going to have a cost of goods sold line for your tasting room so that you can easily report on profit for that tasting room alone and see how profitable it is compared to potentially your retail store or that bulk or case wine part of your company. So after we look at our cost of goods sold and anything directly related to the sale of that inventory, you're going to have your selling, general, and administrative expenses, commonly referred to as SG&A. And any of these expenses are going to be those indirect costs that are necessary to operate your business, but not directly related to the sale of that specific wine. So you're looking at your indirect payroll. So potentially your accounting team that you staff will fall into this section, any sort of office supplies. If you rent out a building for your administrative staff, any sort of sales travel will fall into this section. So as we work through to create a better understanding of our true cost of goods, one of the most important processes is going to be to make sure that you classify your expenses properly. So if you're using a payroll software currently, a lot of these payroll softwares have the ability within them to identify which employees are going to be direct labor or indirect labor. So when we're going through and building our costs, we really want to make sure that we're making this as easy as possible for your operating team to understand and for your accounting team to capture all of these groups and buckets. So if you have a payroll system, and you're able to identify which employees are direct versus indirect, it can really help you group these buckets in a more automated fashion and get that information applied so you can better apply it to your inventory. Your accounting team will be able to support you with this. They'll also be able to help you identify the difference between an asset that you want to capitalize and see in your balance sheet, such as those trellises or a computer, potentially a new tank, or any sort of expenses that you want to recognize immediately upon purchase. So again, those office supplies, those pencils, you're going to want to expense those immediately. Whereas if you have a larger purchase, such as a new storage tank or a new set of barrels for your inventory, you'll want to hold those on your balance sheet and recognize that expense slowly over a period of time. So now we're going to dive deeper into the income statement, really looking at your gross margins and your EBITDA and understanding what this information tells you. So after we go through this, we're going to start gathering all of those costs necessary to calculate your cost per case of wine. So above, you're going to see the three sections that we discussed earlier on the income statement. First, we're going to look at revenue. In this example, our revenue for 2019 was $500,000, with discounts of $50,000, ending with a net revenue of $450,000. So this is what I was trying to explain on the previous side, where we're going to want to see the breakout of that. So our total retail sales value to our customer was $500,000, but we gave sales discounts of $50,000 throughout this period to recognize $450,000 of revenue in the door. So next, we're going to look at our cost of goods sold. We've identified $150,000 here related to our material costs alone. Then we've gone in and added our overhead costs. So we're looking at our direct labor, again, some utilities related to production, any sort of storage costs we may have had for this period, our agricultural expenses as far as maintenance, any sort of fertilizer, chemicals we might be using on the crop, irrigation costs for that period, and then the freight to get the sales out the door. So this is where we really want to start building that basis for, we understand our material costs, we understand the cost of that grape, but how do we start building in these other overhead costs into the cost of our inventory so we can get that true cost of a case of wine to understand our profits? And that's what we're going to continue to build on through these sessions. But again, as I encourage you to get that trial balance from your finance teams, whomever you're working with, we can start looking at how you can gather this information, making sure you understand those direct labor buckets and any of these other cost of sales categories. If we can start identifying those, then when we get into those 201 and 301 sessions, you'll have those available to start building into your cost of inventory. So when we look at our net revenue compared to our total cost of goods, we're going to get our gross profit amount, which comes out to $205,000 in this case. So we're positive, we have profit, we're happy. Then we're going to go ahead and calculate that gross margin percentage so we can start seeing, you know, how does our vineyard, how does our business compare to the industry? Or potentially, if you, once we get to that point when we're breaking this down to the block level, the varietal level, the case good level, you know, what is our margin for this particular wine compared to industry, and start benchmarking that to say, in this instance, our profit is positive. Our gross margin is at 46%, seems great, we're doing awesome. But if we find out industry standard is at 75%, we're probably going to want to start diving in deeper to say, you know, why is my competitor making 75% when I'm only making 46%? So starting to gather those numbers so that we can start reaching out to the industry to see what standard is and really laying out those benchmarks. So the next area that I like to report on, I think is very beneficial, is EBITDA. And so what your EBITDA is going to be is your earnings before interest, tax, depreciation, and amortization. And Investopedia.com defines this as a measure of a company's operating performance, essentially a way to evaluate a company's performance without having to factor in financial decisions, accounting decisions, or tax environments. So as we know, you're making profit, everything is great, but that profit is not always possible without that accounting and finance team, that marketing expense that you had to do in order to get that sales price where you wanted it to be. And just those other areas and expenses that you're naturally going to have in a business in order to continue to operate. So it's important to look at, although your gross profit on the product is at $205,000, ensuring that all those additional expenses and costs don't overshadow that. So although you were able to make a profit on the wine of $205,000, if it costs you $300,000 to market that wine, you're no longer going to be profitable. So when you look at EBITDA, it's a very good indicator of how successful as a whole the operation is running. So your EBITDA is going to be that profit less those SG&A costs, and then you're going to add in that tax, any sort of depreciation, amortization that comes after that line. So in this example, we're adding back in $20,000 of depreciation after we subtract off that SG&A expense. So our total EBITDA is $173,500. Everything is good. So our profit is covering all of those additional expenses. We're still operating and making money. So now we get into the fun start. We have a good understanding of our financial statements. We know where we're going to start gathering and pooling these numbers and information. Now, how do we actually cost our wine? So in every industry, there's going to be a little variability, and it's no different in winemaking. And so there's a lot of things to consider. So the first thing we're going to be looking at is our grape costs. So how much does it actually cost us to either produce to harvest this grape or purchase this grape? So if you're looking at your grape costs, the first thing you're going to want to look at is if you're purchasing the grape, you're going to take the price that you purchased it for plus any sort of acquisition costs. So if you have any freight to get it to where you'll be pressing the grapes at, you're going to want to add that freight to the cost of your grape. You're also going to want to start thinking about the best way that you can keep track of each varietal that you're purchasing, because varietals can vary in price, and also looking at, sort of what that market value for that quality of grape is. So making sure if we purchase this grape, we're including any freight and acquisition costs, and we're able to find a way to easily separate out each varietal's specific cost. Now, if we're going to harvest the grape, you'll have to recognize any sort of direct costs and expenses that you're accumulating during the season to maintain the vineyard where the grapes are grown, such as labor, fertilizer. So these expenses will all be added together to capture the total cost of the varietal for each harvest. Then you're going to transfer that grape into your wine production, and it should be handled as a purchase from your vineyard into your production facility. And there's two ways to do this. You can either purchase it at that total cost that you've captured, or you can purchase it at the market price for that grape. So when you're doing this cost transfer, if you're looking at the market price, what you're going to be looking at is the purchase. If you were to go out into the market and purchase that for specific varietal of a similar quality, what would it cost you? So you would do this to see the overall value and profit of your vineyard, to see what it's providing for your grapes internally. If the market price is more expensive than what it costs your vineyard, then you're doing well. If it's less expensive than what it's costing for you to produce on your own, this is a great time to start looking at, what are those specific buckets that are costing you so much to produce these specific varietals, and where is there any potential for you to cut costs anywhere to become more competitive in the market? Because if your grapes that you're harvesting are going to cost more than a similar variety that can be purchased elsewhere, you're already starting at a disadvantage from a cost perspective when we're looking at this. So in future sessions, we're going to continue to elaborate on better ways to capture these costs, how to identify those main cost drivers, look at potential areas for savings, and how we've seen others doing this in the industry, how they're capturing and gathering this information. So after your grapes has been valued and transferred into production, then you're going to want to look at the total value of harvest, and then to capture that total wine cost. Then you'll want to identify your pressing conversion factor to determine how many cases of wine you'll be able to produce from each ton of grapes that you're able to either harvest or purchase. At this point also, you'll want to include any bulk wine that you're purchasing. So if you're also going to want to look at costs if you're hiring someone to press the wine for you, if that's contracted out. You want to make sure that you're capturing that cost, and that'll be another one of those values that we'll be looking at in future sessions. So for your bulk wine, you're going to want to make sure that you're capturing that the same as those grapes that you may have purchased. So if you're purchasing bulk wine and there's any sort of acquisition costs, such as freight to bring it to site, you'll want to make sure that you roll that into the total value of your bulk wine to get the most accurate picture. So after the wine has been processed and the total value has been built out, you're going to look at your packaging costs next. So this isn't going to include those bottles, cases, corks, caps, direct labor associated with packaging wine. So for today's example, we're only focusing on the material of a case of wine, but we will be looking at that labor of packaging in the future. So whether you're packaging it yourself or again sending the wine off site to be bottled, how do we roll that total value into the final case product? If you're able to break your packaging materials into specific categories, such as your bottle costs, your cork costs, and it's valuable to you, that's definitely encouraged. The more accurate you can get that case of wine costs, the the more accurate you're going to be able to see your margins on that product. If you're looking at, these specific packaging materials and you're saying, our bottles for whatever wine we're distributing all cost about the same. Same with the corks, cases, and labels. There's not a significant cost variance between the packaging from a Chardonnay to a Pinot Noir. Then you may want to just look at this as a total lump sum. Also, as I alluded to earlier, this is all going to be based on the amount of time your team has to put into this too. So if for your team, it's not feasible to track your costs at this bottle, cork, labels, case level, then it's going to be better to estimate your cost per case of overall package materials. So what you'll want to do is say, when we're looking back at that balance sheet, our total packaging materials value was, say, $10,000 on our balance sheet. We expect of that $10,000 worth of packaging material, we're going to be able to package about 100 cases of, or 1,000 cases of wine. In that case, we'll take that total packaging material of $10,000 divided by our estimate of 1,000 cases of wine to get us down to $10 per case to package our wine. So there are always areas here where you can get as detailed as you want to get down to that specific actual value to produce a case. But then it's a matter of how much value that provides your business. If the amount of effort it's going to take to track these packaging materials or some of these other areas at that level is going to surpass any value that it's going to give your operation, you're going to want to make sure that you just have a good solid way to estimate out what that packaging cost is per case. That way you can have a good estimate of what that value of case wine is and what your profits are. So now we're going to look at an example of calculating your cost per case. So as part of the Profit Planner, one of the workbooks that I've been working with a lot is this Winery Cost of Goods worksheet. And one of my favorite parts about it is it has this sort of benchmark for the cost of grapes by region, which is where you're getting that market value of what it's going to cost to acquire those grapes. Gives you a really good indication of what you're purchasing at compared to what is available out on the market, or what you're producing at compared to what's available out on the market. So for this example, I pulled the benchmark for a Pinot Noir for Premium County, and it's $1,800 per ton. So to keep things simple in this example, we're going to use a single varietal to produce the cost of this case. We're going to identify the grape costs so after we've identified the grape costs, then we'll use the pressing yield. And the best way to identify the pressing yield is to use prior year's yield. So if you have history on what you're yielding out of the grape process, the pressing process, that's going to be the best way to get this number prior to actually pressing the grapes. Or else, I'm sure some of you have people on your teams who can go out and look at a ton of grapes and estimate very closely to how many cases they'll be able to produce from that. And if you have someone on your team, that is awesome. I am accounting and finance, so if I go and look at a ton of grapes, I'm just going to see a ton of grapes. So for me, I'm going to rely on historical information to sort of get me to this expected yield that I can expect from 1 ton. So for this example, I used a yield of 60 cases per ton. Again, to keep things simple, I didn't include any bulk wine in this, but if you were to include some bulk wine, all you would need to do is make sure that you added what percentage is going to be from the grapes that you pressed compared to the percent of bulk wine that is used to produce this case. So our grapes cost per bottle in this instance is going to be that $1,800 divided by 60 cases per ton for $30 per case. So if I was using 50% of this at $30 per case, and potentially I had purchased some bulk wine at that same value, I would just do 50% of this one, 50% of the other one, add them together, and if we're using the same dollar value, we're still going to get down to that $30 per case. So here for packaging materials, I broke out each individual material. But like I said before, that might not add enough value to your operation to make it worth tracking at this level. It may be better to look at an overall estimate of what it costs to package each case based on your inventory. So here we have bottles for $12, cork, labels, case label, total packaging cost of $22. So we add the cost of the wine at $30 plus our total packaging cost to get us down to that total cost per case of just materials of $52. So this, just a reminder, this does not include any sort of labor, storage, overhead costs, any costs related to pressing the grapes, any costs related to packaging. But we will start getting into those in that 201 and 301 accounting session. We just want to make sure that we have a good understanding of those financial statements, where we'll gather all of that information from, so that we can start building on this and building those additional costs. Once we have that material basis and a good idea of all of our labor, how to accurately report those, identify those expenses, it'll make it a lot easier for us to build those into this model. I know the costing worksheet that I've been working with in the Profit Planner is a great place to start as far as listing out what all areas you can use to capture your costs, starting with the cost of that grape and then building into that pressing conversion and any sort of additional costs that you're going to see throughout the process all the way through packaging material. And then on top of that, what we want to do is really build on how you can capture those labor and overhead costs and use that costing worksheet to build in the total overall value. So that is my presentation on our basic costing 101. So at this time, I'd like to open it up to questions. I've also incorporated my email along with Jeremy's email here. You can also find us on LinkedIn if you'd like to connect. Let's see.
Casey, we do have a couple of questions.
Awesome.
Do you have a suggested list of accounts we should have set up, i.e. the subcategories, storage, expense, listed under each category on these statements? And would you include the merchant credit card fees into the SG&A?
That is a great question. So at Crafted ERP, we do have a set chart of accounts that we suggest for our customers that just starts with sort of your bank account and flowing through all of these different sublists of areas. I don't have it pulled up now, but if this specific person would like to reach out to me, I'd be more than willing to walk through that with them. One of the things that we use in our Crafted chart of accounts is potentially at the more advanced level as far as breaking out these overhead and labor costs and then applying those back into inventory, which we find is very valuable. What was the second part of the question, Bree?
The subcategories for storage and expenses listed under each category on the statements. Would you include the merchant credit card fees into the SGA?
Yeah, so merchant credit card fees I would include into SG&A. And then for subcategories on storage, what I usually see in the companies that we work with, which again, usually have a chart of accounts and then are able to segment it down into departments, classifications, and location. So if you're looking at that storage account, you would have those different locations, or when you're looking at a winery or a vineyard, you would then also have an accounting segment for your block or any sort of storage location facility that you have there that you can post directly to. If you're working in a system such as QuickBooks that doesn't have that accounting segmentation, what I often see people do is, yes, they list out those sub accounts to say, you know, here is our storage cost, but then I'm going to have sub-accounts for multiple storage locations so I can identify, which locations are costing me the most money. Especially if you're selling directly from those locations, you can then see all of your revenue and costs out of there and sort of build P&L on those specific locations to say, this storage facility or this distribution channel, it's profitable, it's doing great. This other one is not as great. Maybe I should look at consolidating.
Great. And there was a question about, can you break out the EBITDA calculation in your example, please?
Yeah. Let me go back. Okay, so if we look at the EBITDA, what we're going to look at is our profit less our SG&A, and then we're adding back that depreciation. So if we start from the top, we're going to look at our net revenue, which is at 450,000, less our total cost of goods sold, which gets us to this 205. Then from there, you're going to subtract 51,500. And then you're going to add back in this 20,000 to get to our 173,500.
And then another question that came through is, where are design costs for labels and boxes placed, since they're generally one-time costs?
I would build those into that label cost if you're able to. One of the features that we commonly use is the term is landed cost. So with that landed cost, you're building in that freight or anything else. If you're producing this label multiple times in a year and it's not something that you can attribute to one sort of batch production run of labels, and it would be simplest just to expense those immediately.
Great, thank you. And we will make this presentation available, and it is being recorded, so there will be chances for you to revisit the recording as well. Or you can reach out to Casey or Jeremy at Crafted anytime with some questions also. And we will be following up on the 4th of February at 10:30 a.m. with our second 201 accounting series, which Casey will deliver as well. Casey, do you just want to cover a little what you're going to go into in the 201 session on the 4th?
Yes, I'd love to. So like Bree said, feel free to reach out to Jeremy and I if you have any questions, specifically as it relates to that chart of accounts. We would love to help you and support you in any way that we can. So on February 4th, we're going to be doing another go-to webinar where we're going to go over the Accounting 201. It's going to be understanding how to read financial statements and profitability as the topic or the name. But what we're going to be doing during this session is we're going to be beginning to develop that costing model. So using that costing worksheet that is provided through the Profit Planner, how can you gather all of those costs and put it into the cost of goods worksheet? How we're going to be gathering those overhead and aging costs of our wine and getting those into a costing model so that we can get to the true costs of getting that wine, bottling that wine. We're also going to start driving into those major cost drivers that I was alluding to earlier. So if you get to your final grape cost compared to market and realize that it's costing you a lot more to produce than others are selling it for, really diving into those reasons, looking for how we can find savings in your vineyard and your operation to really boost that profitability and make sure you're as successful as possible. And then on February 12th, we'll be doing the Accounting 301 session at the Oregon Wine Symposium. Jeremy will be there. He will not just be a listener, so he will be there to speak And there we're going to be improving upon that costing model from 201, getting down to those block level details, discussing more of how you can automate those processes, potentially leveraging systems that you already have, such as a payroll system, to really capture all of those costs without adding additional work to you and your team.
Thanks, Casey. We're looking forward to that. And for everyone who is attending the Oregon Wine Symposium, there is a registration link available on the program page to register for those classes. So please follow those when you are in the program guide, and we will be sending out additional emails to sign up for those classes also. Until then, if there's no other questions coming through, we look forward to spending time with Casey again on February 4th at 10:30 a.m. And Casey, thank you for your insights and for all of your question answering and guidance. Much appreciated.
Awesome. Thanks, everyone.
And if anyone has any questions regarding the Oregon Wine Symposium or any other industry education initiatives, please feel free to reach out to me directly. That's Bree Stock. I'm at BREE, Bree at OregonWine.org is my email. And please feel free to reach out with any questions you may have or recommendations for future workshops. Thanks, and we will see you on the 4th.